G'day guys, welcome to another episode of the Pumped on Property Show. Today, myself and Simon are sitting down to talk about something that is pretty close to my heart and has been very close in my mind.
Now we get super deep and meaningful in today's podcast, and we talk about some of the battle wounds that we've built up over the years as property investors. You know, I think the industry makes it look so beautiful and so easy to be a property investor, but the fact is, you know, things change constantly and you've got to deal with those challenges and deal with those changes to get to where you really want to be.
In this episode, we do talk about some of the bumps and bruises we've had along the way, but also how we've persevered through that and some of the lessons we've learned. I'm super excited about this episode. It's definitely been one of the most fun, meaningful episodes I've ever shot and can't wait to get your feedback.
Let's jump into it.
Welcome back to another episode of the Pumped on Property Show.
Back into it.
That was no good high five. Let's get some vibes going.
You know, one of the tricks, you got to look at the other person's elbow.
Okay.
When you're giving somebody a high five, you look at their elbow, you'll never miss. You always get a good clap. Always get a good clap.
Yeah, that's tight.
There we go.
Definitely feeling stronger than me at the moment. I was just like, that's nice.
I was saying to you yesterday, I've been training a little bit too much recently, like running, surfing, training. And I was just like, my body was so fatigued and I just had to listen to it and just like slow down, do a little bit more yoga, have some like Epsom salt baths. It's finally like cooler up here on the Sunshine Coast now.
Yep.
So I can actually like jump into a hot bath with some Epsom salts and just like relax. But my mind is always so like almost borderline ADD, I reckon. Like just go. So I find it really tricky to like shift into that like more slow, restful states that are just as important as going. But yeah, it's a bit fatigued, but it'll be all right.
So what is the plan? Like, are you going to give yourself a couple of days of chilling out outside of surfing, or what are you thinking?
No, I sort of like, I'll take a day off every now and again. Yeah. Like I took a day off yesterday, and then I'll probably take a day off tomorrow as well, but then straight back into it. This morning, went for a nice little run. But no, I just find like mentally, like physically I can deal with those little niggles. Mentally I can't deal with not training, you know what I mean?
For sure. It's funny you say that because I have just the goal of movement every day. But, you know, Be Strong down at Moffat Beach, the physio, he drew something on a board with me and he's like, basically, let's say you do a hard surf, like 3-hour surf, or you do a weight session. And it's like, you know, there'll be people listening to this like, Ben, you got the science wrong. But this is what he drew out for me. And he's basically like, in terms of recovery, you know, there's like a sort of 48-hour period. And what I was doing for years and years and years was the same type of exercise multiple days in a row. And I was getting little niggling injuries and just feeling sore and tight. And so now I've used what he told me, which is just alternating days. And so it's like if I'm doing weights like I did this morning, then tomorrow I'll do something completely different and just like get the variety which isn't affecting my recovery. And since I've been doing that for like the last sort of 6 months to a year, I'm feeling way less fatigued and my body's actually like I'm not stacking day in, day out the same activity again and again and again.
It's nice. And like even just hearing that, I'm like, I completely can relate because like when I am having a much better flow of the week when you're doing different exercises, it's fine, it's easy. But then, you know, I've probably surfed like over 10 hours in the last 4 or 5 days and
you're going to be nailed in that training as well.
Running on top of that as well, it's like it's the same things over and over again. So just need to mix it up, but it's good. Like I'm still enjoying it. Like, you know, it's nice to have a hobby like surfing that allows you to like exude physical energy and like get out there.
A hobby or an obsession?
Yeah, absolute obsession.
Like it's just the best thing, man. It's a hobby for me for sure, but when I'm in the flow of it, it's all like it's honestly like it takes so much of my thought when I'm like in the mode of surfing every day or every second day all the time, and it just becomes like consuming. Like my life revolves around winds, tides. What was on the road, now I'm on the coast. It's just like a straight up southeasterly every day and 1 foot. So it's just like...
It's been hard, but I just haven't been worried about it. I am actually obsessed with it. Like it is definitely an obsession for me. Like to the point where it's like, I almost need some other hobbies in my life just to kind of take me out of the water every now and again. But then anytime I start a new hobby, I'm like, this
fun.
isn't as fun as surfing, so I'm just going to go back to surfing.
It's not as social, you're not in nature, it's not as healthy, and it definitely doesn't feel as good.
No, exactly, eh? But look, today's episode is going to be a little bit, I don't know, maybe a bit vulnerable. I think it's going to be interesting to share some stories. The question of the week being like, how has property investing affected your mental health? Obviously looking at, the negative things or what you would consider bad things, and obviously some of the positives as well. And this isn't talked about in investing at all. It's always about like financial freedom, retire early, all of these,
Don't read our website, guys.
Positive things. It is a lot of positive because you need to like promote that, but at the same time, like both of us have got some scars from, being investors and the sacrifices that we've had to make to sort of get to where we are, which is living a life of freedom and choice. But like, to get there, it's really tricky.
It requires, as Jim Rohn said, like maybe sometimes a little bit more than you want to trade for it.
Yeah.
I think even before we talk about investing, just looking at the structure of how society is set up, it's set up on basically young energy, right? Like that's the whole premise of society. Is like young is beautiful, and then with that comes like hustle, and like genetically I reckon we're designed to go hard at the start of our life. And then I've been reading some books like Strength to Strength, which talk about that natural transition from being the dude or the woman that's just hustling to finding joy, peace, fulfillment and pleasure like later in life. And with that comes service, and we'll talk about that more in a minute. But what I think a lot of the messages that I got as an investor, especially in that first 10 to 15 years, or like up until now, even everything I see on Instagram or whatever, is just grind, work harder, push harder, self-sacrifice, like be a lone wolf, like you know what I mean? Like all of the messaging so masculine and so heavy. And it comes with this pressure of like, well, even if it's not feeling great, everyone else is doing it, so I must just have to put my head down and go.
And because everybody else is doing it, you feel if you don't, you're going to get left behind. And then you're going to have to try and work extra hard to catch back up in those later years of life where you should be starting to taper off and take it easy on yourself. And like, it's just the natural circle of life, right? Like when you get to that place where you may be in your like late 20s through your 30s into your early 40s, and that's sort of like that 2 decades of really hustling and going hard for it. But, I feel as though with like the right team, the right support network, the right coaches surrounding you, like instead of doing that for like 2 decades of non-stop hustling right when your kids are young as well.
Do it for 3 to 5 years, right?
Exactly. Like what I've done is like, I've done a sprint for the last decade. And then, now I'm already starting to take some of those layers off and take some of that, external societal pressure that I've put on myself to achieve quote unquote success.
Yeah.
And I listened to this guy called Gabor Mate. He's a psychiatrist from Canada that talks about trauma. And he says like society, creates a lot of this little t trauma in those early years of life, that when you get to this place where you finally become yourself, like those late 20s through your 30s, it's like, I no longer need my parents to survive. I can survive on my own, and you become an individual and you become somebody that looks after themselves.
Yeah.
It's like an escape mechanism to avoid dealing with the trauma that got put on you when you were a younger kid. And like we self-sabotage and work extra hard just to try and shut that little voice in the back of our mind off that's putting us down constantly and saying you need to go harder, you need to hustle, you need to do this, because if you don't, you're not going to be a good functioning member of society.
Yeah, and even worse, like you might just become your full self if you stop, you know what I mean? Like if you unhook from all of the noise, then you might actually become who you're supposed to be. And like to like the negative side of life, that is the deepest fear, right? Like people becoming their full best versions of themselves in this lifetime is like you know, I was even watching the Tom Brady roast the other night.
How funny is it?
It's funny and like
Brutal,
some of it's
though.
brutal,
like
man.
too heavy. I'm like, oh my God, Gronkowski getting absolutely
I
roasted.
felt so sorry for him. He's such a legend.
He is. And Tom Brady, the Giselle quotes. Oh my God, I could not live with myself saying that.
But like he's at the very, very top of his game, and like, you know, it can be rough, like the way that society works. So I suppose I didn't want to talk too much about that today, but to answer the question of, you know, what does it take to go through this stuff to get there? And for me, I think the early stages were really, really, really good. And they are for most people. Like, even though there's fear, doubt, uncertainty, and like I feel information overload, and I feel like I don't have the right team, and I don't know what I don't know.
Yeah.
There's also this, I'm standing from absolute bottom and all I can see is up, which we've talked about before as a concept. And so it's exciting.
And
like, it's really exciting.
There's tangible things to achieve as well at the beginning.
Save this amount. What can I borrow? Start earning more in your job. And then looking at the market, and then, well, what can I afford? And then figuring out the market and going and buying it, doing your due diligence, and then learning how to like run a portfolio. Like, that is, for me, that stage was so much fun. There was only upside, and I had unlimited energy back then.
And I absolutely loved it. And like it's kind of like always having that thing to look forward to, which I think is an important part of life, is just having something to look forward to. And it's like, you know, I'm sacrificing and saving this money so that I can invest in real estate. Then you do it. But something that me and Hayden have talked about, Hayden's one of our colleagues, absolute amazing human being, incredible investor, and just a great father, great guy. But, you know, we sort of did so much in those mid-20s where it's like there's constantly something to do, something to achieve, you know, a book to read, a podcast to listen to, you know, talking to a broker, talking to an accountant, talking to your team of advisors, buying property, you know, doing little renovations. It's just constant projects, and every 3 months there's something different to focus on, which keeps you just
Keeps the
doing.
switch on, right? It keeps the
switch
cortisol on.
I got addicted to those projects. And it's like, once I finished building the portfolio that I needed to have what I want longer term, I then hit my servicing limit. There was nothing more that I could do. And it was like a couple of years of just nothing. And I'm sort of coming through the back end of that. I'm starting to do some fun projects again, which is cool. But there was 2 years where I did nothing, and there was this like voice in the back of my mind that's just like, you should be doing more. And and this is when I was talking to you like, oh, should I look at investing in the US? Should I look at like, you know, selling down some of the portfolio and look at investing in shares? And I'm like trying to think of ways to control it and keep doing projects to have something to like light that fire inside myself. But talking to you and talking to our mate from down in Sydney that used to run the buyer's agency in America, Stubbsy, and he's just like, both of you are just like, you just need to wait. Like, property is a long-term thing. There's going to be many periods of your investment journey where you're going to be doing nothing. And with an ambitious mentality and personality type, it is hard to go through those periods, but you just need to accept that like trying to control it, trying to change things is only going to be worse for you.
Yeah.
Because his experience that Stubbsy has, where he like sold up a lot of properties in Australia to go over to the United States, didn't work out the way that he wanted it to, sold that, came back here, and he just stopped and let it play its course in Sydney, like, you know, he would have been in an incredible position.
Yeah, and same with all these properties in the States, like all of them would have doubled by now because he was buying at the bottom of the last GFC. And so I think that's important. Like, there's the initial energy, emotion of like the ascent, whether that's saving to buy your own home, or you've got your own home, getting your first investment, maybe, you know, you've got your home and a couple of investments. And then most of us hit, myself included, like I hit a servicing thing when I got to my third property. And same thing, like no matter what I wanted to do, for years I was stuck. And for me, at that time, because I was so used to doing something, it was actually really hard to go through. And I was hustling, talking to agents, talking to bank managers, and really obsessed about property, but sort of stuck in a holding pattern. And what I now look back and realise is like that was supposed to happen, for like the world's protecting you from doing too much too soon. And so is the Australian banking system from dumbasses going out there and speculating too hard.
The 80s and 90s screwed us up.
Yeah, without a doubt. And so, coming through that period of being like, okay, I know what it feels like to wait now. And then as soon as I could borrow money again, I just forgot what I'd learned and just went on another spray, to be honest with you.
It's just hard. You like, I think a lot of people that want a better life for themselves in the future, they've got that like ambition, they've got that type A personality, they may be a little bit more controlling. I feel like I'm preaching to the choir right now, like that is me 100%, but it's so hard to just take a little bit of a step back. And I think for you and me, like the best things that we've done is you married Lisa, I married Taylor, who are just the complete opposites to who we are.
Yep.
And they bring us back down to earth. They bring us back down to reality and bring us back into the present moment, which is so important to have, right? Like to have that spouse potentially that like understands your dark side and knows how to bring you back into the light when you're going through those periods, which can last years.
For me, it really did. Like I would stay up late some nights with my spreadsheet and try and like plan the future. I would have like my Word document, which was my goals list, and I'd be constantly tweaking where I was going. And all of that was really, really helpful until it wasn't. I still have like a spreadsheet. I still have like an annual goals list. I still have a vision of the future that I'm working towards. But what really happened for me is I got to a point, I can't even remember when it was, probably 2026-ish.
It's
2016, sorry.
Thinking into the future.
Sorry, I'm in the future.
Traveling alien.
All right. In 2026.
So what's going to happen over the next 10 years in property?
I can tell you exactly what's happened in the past, But I remember getting to the point where I think I paid, I can't remember the year, maybe 17 or 16, but I paid off my first home. And I was like, I remember a friend of ours did it years before us, and she's like, on the day that I did it, I honestly thought someone would come through and high-five me when I walked out the door, and that all of my issues, because I'd been like working towards this, she'd been working towards that for like 10 years, like really going hard. And I had too, like I always came from mum and dad that were like, pay off your own home first. And like the structure of South Sydney was, all people had was their own home. And so the goal was to do that. And I remember selling some properties to help do that and just saving like money from the business and my job, and getting to this point where I'm like, I did what I said that I was going to do, and I did what everyone told me to do. Like I went to school, to uni, travelled, met like a beautiful, amazing girl, had kids, like paid off my house, started this business, invested in all these properties. And I remember like distinctly having this moment of going, fuck, I did everything that I said I wanted to do, and I'm actually still empty. And that was really confronting. And that was sort of like it was like someone pulled the bit of my sweater, and in like one of those like old school cartoons, it just like slowly came, the fabric of like who I was pulled apart. But unfortunately for me, it took like 3 to 5 years for that full process to happen, and you had to sort of watch that from the sidelines. But now I look back, it's like there was this incredible quote I heard during that time, which is like, the wound or the cut is where the light enters. And I really believed in like the social truth of when you're financially free, when you own your own home, when you've got this thing or that light, you will be happy. And I'd bought into it. And then I was like, well, I know that they're not, like I'd read Blue Zones and all that by this point. I'd read all the Japanese philosophy, all the Buddhist philosophy. I had...
You knew in theory.
I knew in my mind, I just didn't know in my life. And I was constantly time traveling to the future. And it was the best thing that's ever happened to me.
Well, that's what I was going to say. Like the thing that's going through my mind as you're saying that, because I can relate in my own way as well to the exact same thing. And it's like, I wouldn't, and I don't think you would change it for the world. It's like...
Not at all.
Sometimes you need that to like light that fire underneath you and give you the motivation to work hard and get there. And it's like the lessons that you learn are so valuable. And that's why the title of this podcast is like, property investing is hard, but it's worth it. Yeah. And it's like these things are going to create the scars, create the cuts. But once you have that hindsight, when you can look back and go, I wouldn't change it for the world because it's given me all of these lessons. It's given me all of these choices. And I think one of the biggest fears that I've struggled with, and like I think a lot of people struggle with at the beginning of their journey, and why they keep chasing and going for more and thinking that more is going to make them happy or whatever, is the fear of losing it.
Big time.
Like,
especially with the background that we grew up in, like that's just the
everyone,
mentality of everyone.
Everyone's grown up like that. Like, everyone, I don't know many people whose parents have not said, we need more money. Like more money would solve our problems. And it's like, well, no, that's not the truth. But it's the mentality and the way that people have talked about finances in Australia, especially middle or lower class, forever. And it's like that fear of losing it is what creates a lot of the anxiety and creates a lot of the pressure and creates a lot of the controlling things that we do to try and avoid losing it. Where it's like, coming back to what I've said like so many times from Jim Rohn, like don't become a millionaire to become a millionaire. Become a millionaire for the person that you have to become to be a millionaire. And
Love that.
looking at these things where it's like, I don't have that fear of losing it. Like I would be absolutely gutted if somebody took away everything that I've worked so hard for. But
again.
I know I've got a much longer time horizon and a longer term perspective now. And I know I've got the skill set and the ability to rebuild it if I were to lose it. And, that gives you a lot of confidence for the future as well. But definitely something that's held me back in the past is like having the fear of losing it all.
There's two things that I was just thinking as you were saying that. For me and you and every other investor, there's the things that pull us towards what we're trying to do, like financial freedom, like choices, like the ability to spend more time with people we care about, do meaningful work, help other people, help our families, train more, travel more, volunteer more, spend more time with our kids, take a day off a week, take 20 weeks off a year, work half the year, like whatever your pull towards the future is. Or for a lot of people we work with, myself included when I started, I just fucking hated my job at the start, only because I didn't recognise what it really was, which was just a traineeship in life and a means to my end. But for other people, it's just I just want to be financially secure, because we both saw one grandma have one home and be cool, and one grandma not have a home and really struggle to the point where her kids had to on top of the pension top her up just so that she could eat. And I'm like, security in the future is a big towards motivator for a lot of people. But then there's also for me the things that I'm moving away from. For a long time I was actually moving away from the person that I had allowed myself to become as a young person, which I had some incredible experiences like everyone. I had some really hard experiences as well, but I kind of wanted to prove to the world that I was worth something, you know what I mean? At the very start of my journey I had I was trying to get away from who I was and become someone who I thought would be celebrated and get the pat on the back. But I realized I was the only one that I ever needed to pat on my own back. You get it. Everyone does. And there's other things that we're running away from. We're running away from not having money growing up, not having that cool thing that some other kid had because his parents, he was an only child, or his parents were loaded.
Running their own business and loaded, yeah.
Or away from not wanting to feel that fear and insecurity, and thinking by plugging the hole with property or financial freedom, that emptiness inside is just suddenly going to disappear and you'll be a full person. And how often do we talk to people that we know in our immediate circle that are how we were, when I get this, I will be
that,
full.
Yeah.
I'll be that, I'll be respected, I'll be looked after, I'll be
powerful,
safe.
whatever it might be, they're all illusions.
We're always moving towards and away something, and it's the sooner we recognise that as investors, the sooner we can go, these things don't matter, and then start that process that you and I started 5 or 6 years ago by going, well, let's say nothing matters right now, then what will give life meaning? And I remember sitting in the room with my psychologist, Zach, at the time, going, food tastes like ash to me in my mouth. This is how fucked up my headspace was. I was really in a dark place, a black night of the soul moment for me. And I don't know who I am anymore or what I am. I'm completely lost. I feel like I'm just spinning around the sun on the earth. And he's Ben, you are your values and you are your decisions. And he's like, the decisions you make determine who you become in your destiny. And he's like, so you're just one decision at a time around realizing who you want to be again. And it was like almost like building those foundations again the second time over when the tower had been smashed over, and going, fuck, this is awesome. Like, I get to build me now without the social pressure, without the family pressure, without the friend pressure, without the pressure on myself, and go, who do I want to be?
And with all of the experiences of the past as well.
Oh, with a skyscraper foundation
Yeah.
instead of a residential slab, like Brian Tracy says.
That's exactly right. So, you know, it's so hard when you're going through it in the moment. And I've never experienced, you know, the level of like pain that you went through. And, you know,
The crazy thing is it was all in my head.
Yeah.
It wasn't real, but it felt real at that time.
And it is real at that time.
It was
like,
very
there's
real.
no denying that, and there's no downplaying that at all. But, you know, in watching you go through that, and like the lessons that you learn and the lessons that you've been able to teach us, and like some of the key takeaways is like, well, when you heard that and you shared it with me, it's like, well, what are our values? You know, and then you start to think about like who you are as a person and what brings you meaning. And you write down those values, and we started living life with a values-based approach. We started running Pumped On Property with a values-based approach. And life just got better. And
Exponentially.
what we also did is we stopped thinking about what we don't have and what we want for the future, and started to look at what we do have and the things that we can be grateful for in the moment.
That was big when you said that to me. I actually asked Simon once, I'm like, "What? How are you so happy all the time?" And you're like, I just focus all day on gratitude. And I'm like, I'm just going to try that. And since I started doing it, my life's changed so much.
It was a lie, Benny. It was a lie. No, it's the truth. Like, I do try and focus on that, but it comes and goes in like swings. But what I've realised, I did a genetic test recently, and the genetic test told me that like I have like much higher than average levels of dopamine and
So just
neurotransmitters. So
like Simon's on pingers all day.
I'm just doped up on dopamine all day long, baby.
That's so good, man.
There's like pros and cons to that for sure. Like, you know, obviously being optimistic, positive, happy. I never really suffer from melancholy. Well, not bad and not for long. But the other thing is like I'm constantly on. My brain doesn't shut off. It's always thinking. My wife is always saying like, I wouldn't trade anything I have to be in your mind, eh? Like your brain is just an absolute like circus show.
You know, like that's probably a really good segue, man. And like I've learned so much from you over the last 6 or so years that have just been so important for me, and I'm so grateful for that. But what going through these different emotions as an investor did for us is, by that point when I was having my like little breakdown, was like I think I'd already bought 8 or 9 properties, and I was only in my very early 30s.
Started a business, had 2 kids.
Yeah, like I'd made some mistakes, and I'd sold some properties. Like I didn't own 9 at that time. But do you remember like one night with that anxiety, I'm like, there has to be a method to madness within this space. And I found Phil Anderson and Fred Harrison's work and Ray Dalio's work. And we started let's understand like the macro, the big picture. And then you and I spent years going micro, like, well, how does that translate to Australia? What actually happens? What are the rules of global money movement and the local result of like how things work in Australia from a property perspective?
And just to interject there, like something that you and I just naturally love doing is like reverse engineering. You know, for us, we always start big picture and then reverse engineer it back to the little picture. And that's just what we've always done with clients, developing strategy, what we've done for ourselves as well. It's like, and even with our motivators in life, it's like what do we want to be doing in the future, and then what do I need to do today to make sure that I'm working
What's the
towards
next
that.
step that's in alignment with where I want to be down the line, and just obsessively live in the moment for that next step.
So following Phil and going, okay, well, we've really got like a very macro approach now to how the world works and how money works and how money moves. But then how does this relate to our little niche in Australia, the little drop in the big pond? So
Yeah.
sorry to jump in there, but
No,
I
I'm
just
glad
wanted
you
to give
said
people
that.
context to like how we think and like how meaningful this was to stumble across this information that just gave us like a North Star.
It was exactly that. And so I actually sold down, and this was a huge identity death for me as an investor. I sold everything except my own home, which wasn't my dream home, and one investment. And we created a plan to redesign a portfolio that was in line with my values. So for me, I don't want to be the wealthiest dude in the cemetery. I want to be financially free in my 40s, 50s, 60s, 70s. And so I had a portfolio that was going to make me wealthy with long-term capital growth, like everyone in Australia with good assets in major regional markets or capital cities will end up. But I didn't have choices at that point that I wanted. And so I designed a portfolio or an idea of high quality houses in great locations at the right stage of the cycle. But then we added in, well, we also want some incredible tax benefits if we can get them at that time. We also want great cash flow at that time as well. And we don't want to sacrifice our growth on that as well.
Because cash flow is what's going to get you through the difficult times and give you the choices. You know, so many people don't put enough weight on that, and it's such an important aspect of having that confidence through more challenging times. Like right now with higher interest rates, having dual income properties, it's an absolute godsend.
Without a doubt. And then I went through what was the craziest period of reaccumulation in my life.
Yeah, that was so cool.
You know, I went and did, at that point, I built a whole bunch of properties. I did subdivisions. I built properties for Airbnb. I did houses and granny flats, dual income properties, renos, moved my own house a bunch of times, and set up a portfolio that I'm genuinely proud of at the moment. Like it's working for me. It's got me to 6 figures a year of passive income now, even with these crazy rates. It would be a lot better without these crazy rates. But it sort of like got me back on the path that I was at, which wasn't looking to become wealthy with a huge number of properties, but just a really small number of good properties that would give me and my family choices in my early 40s that I wouldn't have had unless I started to move the dial of what success looked like.
And so many people hold on to like something that they know is not working for them, right? Like a bad habit, a bad relationship, you know, a bad portfolio, because they're so scared of losing it. And they're so scared of the ego death. Like, you know, how hard is it for somebody with your personality type at that stage of life, maybe not that stage of life, but a couple of years earlier,
Oh man,
like
I didn't
going
want to
from
accept
9
that.
properties to 2. It's
Yeah.
like there's not many people in their late 20s, early 30s that would accept that reality. And so they hold on to it, which makes it harder to change and pivot. And like the beautiful thing is that you have and always have had this is like you don't have an ego in relation to this stuff. You're so analytical and logical, and it's like you stumbled across new information that you didn't have prior, and you learnt it, you believed it, you studied it, and it had now enabled you to have the confidence to change that. But so many people just don't make that decision quick enough, and they hold on to things for too long, which makes it even more challenging to change in the future.
And like, I want to talk about an example of that, and I completely agree. And there's that, and then there's the stuff from like Harvard too, which is like the doctor thing. By the time the doctors finish their 7 years of training and starting to make like money, they're so deep into it. And then there's another 3 years of training before they're making good money, that there's this time bias of like, Tony Robbins talks about all the biases we face as investors in Money Master the Game. Like, I highly recommend reading that chapter. And it's just like most people are so deep. Oh, that property, it's got like an emotional attachment because it was my first one, or Sydney's always done really well and I don't care if my property's worth 2 million and only renting for $700 a week. It's a great asset and it's worth buying. Or for me, like a perfect example of this is when I started, I bought the best I could. which was, with my limited knowledge at that time, a 2-bedroom unit with city and water views in Miranda in the Sutherland Shire, and a 5-bedroom house up on the Central Coast in probably the worst suburb in Australia at that time. And they were the best decisions I could make with a $350,000 and a $210,000 budget. And so I made them. But I didn't aspire to, like, for the rest of my life, keep a 2-bedroom unit in a complex of 400 units on a main road, or a 5-bedroom house that was fucking destroyed before I bought it, let alone after I went through what I went through on it. And so it was like, yes, there's so many accountants that are like, never sell property in financial advisors. And I get that. For the average person that's only going to do a couple in their lifetime and they've followed the rules and done them well first time, don't sell. Like, but for me, I'm like, these are cards, like literally Pokemon cards, and I'm just trading them up. Like, that's how I thought about it. And once I got used to selling them to move closer to where I wanted to be, it got easier and easier. Even though there was an entry, a holding and an exit cost plus a big tax cost, I was able to split those first few properties from 2 into 6. Mm-hmm. And people, like, I was talking to my mate on the weekend, Macca, who I did those first 2 with, and he's like, I'm sorry, bro, for like everything we went through and like wanting to sell them earlier than maybe you wanted to. But he's like, dude, you went and did what you said you were going to do with them. Like, I took the money out of them and got more leverage. And I think that's something that you and I have both done. Emotionally, most investors are very cautious, as they should be. And so they slowly make decisions over 20 years instead of making decisions over 5, getting financial peace and then just chilling the fuck out.
And I think that the issue there is, you know, people don't have that longer term vision. They're thinking in, years instead of decades. And we think in decades, and it's like a lot of people in doing that, they're thinking about the short term opportunity costs. They're thinking about the short term costs that they're losing. So like, yeah, you know, what if I sell that house and I have to pay $200,000 in CGT? Like, I don't want to pay that $200,000 in CGT, but what are you losing if you don't pay that CGT and you hold that property and it underperforms for a decade? Like, there's so much that you're potentially losing, and it's just accepting that fact. And it's like, everyone's got to start somewhere, but then we gather more experience, we gather new information, and with that, you should be leveling up. And it's like, you've sold down a massive portion of your portfolio to reinvest into high quality assets that aligned with your strategy and goals and values. Like, I looked at mine, and when I first bought them, I'm like, this is everything I want. And, you know, I couldn't have imagined anything better, because I was down here at that stage of life, and what I was doing was like better than what I expected I could do.
Yep.
But now I'm here, and there's a lot that's changed in that period of time, and I'm looking at the portfolio, and I'm so grateful that I've got options and choices with that portfolio, but I know that they no longer serve the purpose that they initially did when I first bought them. And you just got to be okay with the fact that sometimes you do come across new information, or your life experiences create a different version of yourself that forces you to change.
The thing about what you did, and this is the benefit of like being open to like learning things, you bought a portfolio that made sense on the 5 things that I won't miss on property. So by the time that you were buying your first one, we'd already gone through all this stuff. Yeah. Plus we'd bought hundreds of millions of dollars of property for other people and learned from every one of them. But for you, it was like, we want capital growth long term, we want timing, we want incredible cash flow in the future, we want tax benefits as well, and we want super low maintenance, tenant ready, stuff near the beach or stuff near the city. And so we applied that to Simon's, and while some of them are a tiny bit painful at the moment, and we can talk about that pain in a second that you've just survived, but they all have the potential, because you bought the right market at the right time, at the right price, with the right upside through development, that you can transition your portfolio to what you want it to be, where I couldn't, because there was too many mistakes. There was so many small lots or crappy units or wrong markets at the wrong time, where it's like yours is set. And that's the benefit of working with people with experience.
Yeah, and even though we did all of those things and hit all of those big rocks, it's still like, even in hindsight, there's things that you would change. And it's just like recognizing that nobody's perfect. There's no silver bullet. It's just about, you know, getting stuck in and trying to figure it out.
When the bank says you can borrow 400K, then that means you can't borrow 3 mil to buy Bondi Beach.
Exactly.
So it's like if Bondi Beach, Manly Beach, Cronulla Beach, St Kilda are like Freo,
Wynnum,
the like national standard of like what blue chip looks like, and we don't have 3 million bucks, then it's like, of course there's going to be concessions on the way down.
Exactly. And you just got to be willing to roll with that and do it. And it's like looking at the news coming out with the tax cuts coming up, which we'll talk about soon as well. It's like the fact that these tax cuts are going to increase people's serviceability is just such a nice thing, because they're going to have that capacity to get into a nicer property, a nicer area that maybe aligns more so with who they are. But it's like right now with the higher tax rates, with the higher interest rates, with the higher serviceability buffers that they put on top of it, it's like concession. And these are all external. That's not an internal thing that you can control. It's an external thing that you have to like work with to figure it out for yourself. But like, you know, these things are constantly in flux. They're constantly changing. You know, what year did you first buy that unit?
2011.
You know, so what's that, 15
GFC.
years almost. And like how much has changed over that period of time. Like if you had have expected life to be what it was like in 2011 forever, like
I actually found my diary recently at that time. Like I've always written goals since I was that age, and I found it recently when I was cleaning up the shed, and it said, just like, if I could replace $35,000 a year of passive income, I'll be financially free. And so that was my initial goal. And the other one was like, get financially free by 30. And I look back now and I'm like, that guy, I just want to be like, thank you to that guy, you know what I mean? That had all that energy, that had that vision, that was prepared to listen to everything and read every book and talk to every person possible, and just go, thank you, bro. Like, you did the best you could at that time, and it's got us to this point now. But yeah, like, I think with all of these things, like, I remember that time so specifically, I was the only person rocking up to open homes in Sydney and Wollongong and Newcastle and the Central Coast. My friend and I, or just me on my own, was just driving around all weekend, every weekend, looking at places, trying to figure out the market with my little Residex report. And I couldn't understand why it was so cheap and why no one was around. And then I found out like a few years after that we're in like the most hectic financial environment since the Great Depression, and I didn't even know we're in it.
No.
And I remember going up to the Central Coast, and this real estate agent took me to like 12 places in one day, and we were the only people at every open home.
Yeah, wow.
And I just went, I didn't know about timing. I didn't know about markets. I didn't know about history. I didn't know about buying the right land size on the right road, in the right suburb, in the right street. You can still win in real estate with a long-term plan, but if you stack the cards in your favour and learn how to card count, oh my gosh, the returns can be exponentially better. Like, think about how insanely quick your returns were because we use 2 or 3 indicators that we share with clients that just show you what...
Well, the proof is in the pudding there, right?
Yeah, not what's coming next, but where undervalued markets are.
And like it seems to be the case. Like, we've bought in probably over 100 different suburbs, maybe more.
In New South Wales and Queensland.
Exactly, and it's like every single person that we've helped buy into those markets at that time has made short-term gains. Every single one, because like...
There's one indicator.
There's an indicator that like you can look at, and that will give you a good source of truth. But we wouldn't have had that indicator hadn't we stumbled across the long-term way properties or the economy works, and then having the Homely article to relate that on a year-by-year basis as well. It's like, it's just funny how, you know, serendipitous some things actually become, and it's like, you know, how did we not stumble across Phil? How did we not just been sent that Homely article? Like, it would have been a completely different business, it would have been a completely different strategy, it would have been a completely different way of becoming property investors, but, you know, the world just shone a light on the things that we needed at that point in time.
But yeah, I suppose there's 2 things that I wanted to finish on. Firstly, we both had stuff happen in our portfolios, which is really scary stuff, and it freaks you out, and it does create anxiety and fear and stress response. And then there's, you know, ultimately, like, what property has enabled us to do and become, which we kind of touched on in previous episodes as well. But, you know, like, talk about a few of the shitty things that have happened to you.
Yeah, like, I guess the biggest thing is, like, having that feedback from the RBA where it's like, we're going to keep tax rate, we're going to keep the cash rate at, you know, wherever it was, 0.1% at the time until 2025. And it's like, at the time, I'm talking with my mortgage broker and I'm like, well, I don't want to fix my loans for too long because I think that rates are going to be low for quite some time. So I'm happy to do it on a short period of time. So it's like, you take this information as truth from these big governments, big business, whatever it might be, big banks, and like you make strategic decisions based on that, and then the goalposts change. Like, that's probably been the biggest thing for me. It's like, I would have done things a lot differently. I would have put longer fixed rate mortgages to have the lower rates for a longer period of time had I known what was coming. And like, going from, you know, having my properties pay for themselves to having my portfolio cost me, you know, $10,000 per month sometimes.
And like, not being in a position to change because you're servicing capped as well. And so it's like, oh, when the interest rate period ends and the fixed rate ends, I'll just refinance. And it's like, oh, like, now the servicing's harder, you can't. And that's what gets a lot of people in trouble.
And it's like, I just have now realised, like, don't trust the RBA, don't trust the banks and what they're telling you, because like, it will be different to whatever they're telling you.
Yeah.
And accept that, like, you shouldn't be running your numbers on the lowest interest rate we've ever seen in history. Like, I should be looking at like a longer term average and going, okay, when I'm doing my spreadsheets, when I'm putting my numbers into my like little spreadsheet, I'm looking at what the average should be. And then rather than, you know, expecting it to be lower or thinking it's going to be higher, it's like, this is what the average is going to be over the next 10 or 20 years. So like, that for me was like something really difficult to deal with, because you have this one expectation and then it's the reality is just completely different.
Yeah.
The other
scary too.
Exactly. It was just like, cost a lot of money. So there's been months where it's like, how the hell am I going to pay for these mortgages? Like this, that's a big income, you know, like I'm not killing it.
Yeah.
And you know, that brings a lot of fear. And then those discussions, like the anxiety that you have around the household about the financial situation, the energy that you bring into work because, you know, you're worried about paying the bills and things like that. And I think everybody listening to this can relate to that.
Without a doubt in this
that's
market.
something that every single person has experienced in the last few years if you bought a property at low interest rates and now you're at 6-7%.
Whether you're earning 50K or 500 a year, like, living costs are fucking heavy at the moment.
It is, you know. And then the other is like, you know, the reality is I bought the best possible asset that I could with my budget at the time, with what I could afford at the time. But, you know, let's not beat around the bush. They're definitely not the nicest houses. So
the first two were like rough.
Very rough. So like the tenants that I've had in those properties have been, you know, the lower end because, you know, my properties are below the median house price. They're below the average property for the suburb and the house is really average. So it attracts that demographic, that type of tenant that isn't going to always be in a good financial position. And then you add inflation and the increased cost of living for these tenants. And like, I've had months where my tenants are just in arrears, not paying their rents. And it's like, I still got to pay the mortgage. My interest rates are going up and these guys aren't even paying their rent. Mm-hmm. And then it's like, you'll have people, you know, not look after the property in the right way. Like you put trust in your team of advisors and then, you know, certain things might occur and it's like, you're getting blamed for certain situations that you're just not aware of. And it's just like taking more personal responsibility and being more accountable for your situation and like the lifestyle that I've got is something that I've learned from those lessons of being like, okay, well, yeah, I got myself into those properties, but, you know, going for a third and a fourth property instead of adding value to the ones that I already had has caused some headaches and made it really tricky dealing with those tenants and dealing with the maintenance associated with those two really shitty properties.
And you sometimes don't factor that in, like you mentioned, where you set rates low. As you start out as an investor, you think that everything's going to be smooth sailing, and this is a big trap. It can be. Like, you can have 5 or 10 years without a single maintenance request on your property and then you could be up for 50K. or 30K or 20K. And generally, the lower the socioeconomic group of people living in the property, the more demands there is for things to be done that don't really need to be done. And so there's just this, I didn't factor in 10K last year to like do this random 5 things that came up on the property because it's a 60-year-old property that should be knocked over, which was the plan when I bought it. But then I couldn't get finance to knock it over as quickly as I wanted to. So it's like I'm stuck in the limbo.
It's stuck in the limbo, and it's like I look at it now where I am and I'm like, cool, I've got things set up so well now, there's no issues. And buying those extra 2 properties has put me and my family in such a better financial situation.
Giving you 15 years of your life back down the line.
So it was worth it. Like if we look at the net benefit, I'm in a much better situation dealing with all of those challenging circumstances and tenants and, you know, having those additional properties rather than, you know, putting all of my eggs in that one basket and not having the additional assets to rely on. So it's like the scales balance themselves out. And that's the thing. It's like I don't stay in these places for too long. Yeah, like, you know.
Learning, move on.
Well, experience, talk to your team of advisors, talk to your mentors and coaches, realise that you're not alone and everybody goes through those same challenges at a stage throughout their journey. So just feeling, oh, this is normal. This is just a normal part of the journey that everybody experiences. And then coming through the other side of it and then going, oh, cool, like I learned so much from going through that challenging phase of life. And
I love that.
I wouldn't trade those lessons for anything. So, you know, they're probably the toughest things that I've dealt with up until this point in time. I'll go into a little bit more depth on one of those once it's completely resolved. Yeah, once it's completely done. It's still not fully there yet, so I'll get to that. But what about you? Like, you know, I've only been doing this for like 6 years now, like 7 years. So what about yourself?
You know, I think listening to advisors has caught me out a few times. Like, same as you, like with these interest rates in particular, like I had an advisor who'd been in the industry for 20 plus years, very knowledgeable, super successful, like more than 20 properties himself. And he said to me that he thought the most likely thing with rates was down. And I reckon it's cost me $400K in interest since he said that, when I didn't fix it like you guys did at that time. So good lesson. Like next time rates for me are below 4%, I'm seriously considering like
a long-term fix.
Locking cash flow.
Yeah.
Personally, that's just a lesson I've learned. On another property once, like I took my solicitor's advice without double checking it, and I was doing a subdivision and the builder started to build on the lot that I'd sold to someone else. And I was just so freaking lucky that this person had flown up for the first time in a year to see their property the day that the builder was there scraping the site. And the person's like, what are you doing on my site? Versus me having built a house that they could have taken ownership on. I had a tenant burn down my property on the Central Coast as well, which was hectic. I've done some damage renovating as well, like a few times. Like me and a mate were like trying to like get a property of mine tidy, and I was like he was high pressure washing the roof up the tiles, and then I heard the roof fall in like when I was asleep that night. And then Lisa's crazy uncle came around and he's like, oh look, you can pull this, and then he pulled it. And he pulled like the tape between the boards in the roof and the whole roof in the lounge room down the hallway and the kitchen just fell in. And I was like, it turned like a $500 job into like $10,000.
It's good that you can laugh about it now, but I would imagine like take us back to like when that actually happened.
Honestly, bro, like you've seen me with a lot of things come up. Like I kind of, it's bad to say, like I just don't give a fuck. Yeah. Like I care, like inside it eats me up, and that's probably why I got all that anxiety, because all these things were happening at the same time. Like the property burnt down, the shit was going on with that. I was having like my moment. I was renovating, moving, the kids, the businesses, all that stuff was happening. But like I just always immediately move on to solution personally, because I'm like, let's get real, right? Like when I was earning $80,000 a year, and I bought a property for $200K and sold it 6 years later for $600K, I made $400,000 out of thin air which I've paid a lot to the government, obviously, when I sold it.
Just a cost to play the game.
But I made that money out of air.
Yeah.
Without having to work for it, without having to really do anything. And if you think that you're going to make more than you earn a year after tax without doing anything for it, that's the trap that I fell into. I expected that I'd just buy places, good or bad, and they'd be sweet.
Yeah.
But little things come up, and it's like, now I've got a completely different approach to it. It's like, okay, consult the team of advisors all the time, but I've just got like a Microsoft to-do list with my annual property investment checklist. So it's like, once every year I high pressure wash my properties, so I only have to paint them once every 20 years, not every 10.
Yeah.
Like once every year I weed and feed my property, I put new mulch in, I rip out plants that need to be ripped out, replace a few more, and I keep it in good nick. Like when my tenant moves out, I pay for the bond clean and carpet cleans and get the property presented beautifully. Like once every 5 years, I just get a painter on an hourly rate to go do like an inside coat of the property to keep it nicer. And like, these are my first properties, man, like maintenance. Like, don't ask me to fix the screen door, man, because I'm saying no. Like, that's my mindset back then. I wouldn't do anything. And now I'm like, hey, something comes up, address it in that moment if it's warranted, and then like just move on.
Yeah.
And so I'm putting the passive income that my properties are providing me into an account so that I just know that like the cost of owning 4 or 5 properties is 100 to 200 grand over 10 years. Like that's the cost.
Easy.
But if you're making $1 million every 10 years, then like show me like where I can put 200K down and get $1 million in the next 10 years, and I'm putting everything I have there.
Great ROI.
Like, so this is the thing. It's just recognizing that I'm a more mature investor now, mindset wise, more emotionally stable. And then outside of investing, we've got much better habits and practices now.
Exactly.
Like we do meditation, I do prayer, like we do gratitude, you do journaling, we do train, like we do hang out with mates, we do live our values, we do take a day off a week.
Yeah, eat
and
really healthily. Yeah.
Manage those things that we can manage and then just let go of everything else going.
Exactly.
Anything that can happen, can happen.
Yeah.
Once I found out that like I didn't have a process for insurances, now it's in Microsoft to do and it's a reoccurring thing. And on top of that, I've got a guy that puts it in place whether I've paid for it or not a month before it's due, and I've got a month after it's due to pay it, which is like a insurance broker. Like I'm like, that's on him now, the liability. And all I have to do is approve it, make sure it looks right, push him down on price because they're always bloody going up, these insurances, and then lock it in. But I've had times where I've like, oh shit, I didn't have insurance on that property for 9 months. It was a $1 million asset. I'm like, what was I doing? Like, not having a system, having all my bank accounts scattered, so my brain was scattered. Like, just as you said, like systemizing things has made things a lot better.
Treating it like a business.
It's like a business.
Since you started this business and learned all of that, because like, you know, you mostly worked for other people in the past and you know, you start this business and you're like, oh, like this works when you put things into a process, and then transitioning that into the portfolio. Because as you just said, like, and for me as well, like my capital growth rates have exceeded my income by far.
Same.
By far since I bought those properties. And it's like so many people expect property investing to be free. They expect it to be easy and something that they're not going to have to think about or worry about. But it's like there's no free lunches in this world. It just doesn't exist. Like you've got to do something. And to think that we're earning so much money from these properties and all you got to do is like 10 minutes of admin every month or maybe 30 minutes of admin a month. It's like that's all you got to do, and that's your business planning, that's your side hustle, that's your future income. So when you're no longer earning 100 grand per year, you're still earning 100 grand per year.
Yeah, or in retirement you've
so
got
it's like
choices.
Just be realistic and be, you know, understanding of the way that the world works. Like there is no free lunches. You're not going to get anything for free. There's going to be some scars. There's going to be some cuts that you'll get along the way. But hopefully, if you're anything like us, you're going to learn from those mistakes. You're going to learn from those challenging experiences and become a better version of yourself, become, you know, a better investor, and look back with that hindsight and go, I wouldn't change a thing. Like I'm so grateful for everything that's happened throughout my journey of life. And if I were to be born again, there's literally nothing that I would want to change. Even all of the shit that has happened, there's nothing that I would change because I'm really happy with my life at the moment, with who I am as a human being, the people that I surround myself with, the good fortunes that I have. Like I am so grateful, and I don't want more than what I've got. I don't want less than what I've got. I'm just so content and happy with who I am and where I am, because I've learned all of these things and I understand who I am. I understand my values, and I've designed a life that allows me to live in alignment with those values and be grateful and live in the present moment and not get too ahead of myself or competing or comparing myself to anybody else. It's just like, figure out who you are, design a life that enables you to live your best life, and let go, enjoy the ride.
Yeah, surrender. Like, what has, I was just thinking about the question, like, what has changed in your life over the 6 years, like in terms of your direct lifestyle? Because people think that investing can take 15 to 30 years to like show up. But how has your life changed since you decided to become an investor until now? And it's only 6 years is, in investment world, like nothing. Like 6 years is like you could have lost 30% or made 30%. Like who knows what can happen in 6 years?
100%. You know, I've definitely talked to people that haven't made a cent over that 6 year period. The best thing that's happened to me is like the lessons that I've learned from going through this shit has allowed me to become like a worthy human being to attract somebody like Taylor. Like that's really it. Like
you leveled up and it brought like
the right person into
emotionally stable, beautiful human into your world.
Kind, loving, supportive, beautiful, you know, everything that I could want in a person. So it's like, and then everything else is secondary to that really. Like it's the person that I've had to become in doing all of this stuff. Like it makes me emotional just talking about it. Like, you know, the discipline of saving and investing that money into high quality assets, like
it's not easy to do.
Not going out and partying and being hungover every Monday and Tuesday because I fucking burnt myself out on Friday, Saturday and Sunday. Like, you know, becoming a better version, like meditating, going to bed early, waking up early and going surfing every single day, bringing gratitude into my life, bringing journaling into my life and constantly tracking how I'm feeling and what I'm doing to feel that way. Like what have I been doing in my life when I'm feeling down? What have I been doing in my life when I've been feeling good, and trying to shift things towards like a better lifestyle. But like the financial things are a byproduct of the person that I've become from, you know, going through this journey over the last 6 years. And I always say that about the business. I'm like, if you operate with a values-based approach, putting your clients' needs above all else, like that Les Brown quote, help others achieve their dreams and you will achieve yours, and having that abundant mindset. And it's like, if you give and if you care about other people, the byproduct of that is going to be what you want. It's what the universe gives you. It's what God gives you for doing the right thing.
Yeah.
And I would say like that's the most beautiful thing that I've got over the last 6 years, is just like all of those realizations. Like the money is just a byproduct of the person that I've become on this journey. Does that make sense?
I love that so much. It does make sense. And things still happen when you're trying to do the right thing. Like what's happening with one of your properties at the moment, which we'll talk about in a couple of months, sucks.
Yeah.
But you're not like...
And that wasn't my fault either.
You're not poor me, and you're not like the world is turning on me.
I'm blaming.
Yeah, and it's like, it's just sometimes things happen. And one thing that I learned on my trip around Australia recently is like there's always going to be positives and negatives, good and bad. There can't be day without night. There can't be light without dark. There can't be great people in the world wanting the best for people without other people wanting to take the best from others.
Tear it down.
And so it's just the case of like acknowledging that you'll go through the waves as an investor. In the last 9 years we've been doing this, I've seen markets go up 20% in 2 years. I've seen them sit flat in 2 years. I've seen them actually decline by 10 to 15% in 3 years, although the reporting at the end of the year because the market turned didn't look like that. And I've seen them do everything in between that, like many years of 2 to 5% growth where people are just like, oh, nothing's really happening. Until it happens.
5% growth on $1 million is $50,000. Like,
happy
who
days.
Complains about that?
Yeah, especially on leverage money.
When people talk to me and they're like, oh, the property market's not performing that well, I'm like, it went up over 10% last year.
I know.
What more do you want?
And that's on leverage.
Because it went up 25% the year before. Like, come on.
Exactly. But yeah, I think for me personally, I just think it's enabled me to become more of the person that I was born to be. And I'm still becoming that. I'm still going back to who I was born to be now. And I'm moving towards it as well. But I just feel like it's enabled me to take 6 months off, like 15 years in, and travel Australia with my kids in a caravan. Like, it's enabled me to take Fridays off, which I never could have dreamed of working full time for other people, because most people don't want you to do that. It's a control thing with them. Like, it's enabled me to be there for my kids in the afternoons or the mornings, to surf more, to train more, to like hang out with people more. Like, I'm not fully financially free to a point where I could cover my life yet, but I'm getting closer and closer and closer, and I'm one property sale away from like really speeding some shit up. And so it's like, I'm just, more than anything, I'm grateful. Like, when I wake up in the morning, I'm just like, thank you. Like, God is my language. Like, that's what I use. And I'm like, thank you, God, for just another day. Like, I'm here again. And I'm so stoked for that. Like, I don't want to waste the day. Like, I don't want to not contribute. And I'm not talking about going into everything at 10 out of 10 in hustle mode. It's just show up, like, get to go to sleep with regretting who you were that day. Wake up the next day, try and help someone else again, and like see what comes over a lifetime of doing that.
It's beautiful, man. I love it so much. I'm so fortunate to be doing this stuff, and you know, doing it with you, doing it with Crystal, doing it with Hayden, doing it with Ben, and all the amazing clients that we get to work with as well. So, you know, it's funny. Like, it's just, you just got to sit back and be grateful. And
I'm just grateful.
Like, just chalk it up to that. But gold nuggets.
Gold nuggets.
News.
Let's just
Shall we wrap this bad boy up and get into the gold nuggies?
Yeah. So I think gold nugget of the week this week is one that we've been looking at for a long time. Actually, we got this from ABS years ago.
A report from the ABS, which actually blew my mind. Like, you kind of feel it, but like statistically, it was crazy to know it.
Yeah. So what they're saying is 75% of Australia's future income, job, infrastructure and population growth is going to occur between three parts of Australia: Sydney, Melbourne, Southeast Queensland. And so I'm not a gambling man at all. I do like roulette. Like $5, maybe $10 on the roulette table if I've had a few beers. I haven't played roulette for 5 years.
Wasn't it 500 in
Vegas? Yeah, we doubled it up. That was so sick. Me and a mate booked 500.
But I get what you mean. Like, you know, you do not want to gamble the massive deposits that are needed to invest in property on, you know, anything less than that.
For me, it's a very, very clear sign of where the most likely places for future growth are going to be. So very simple, like Melbourne, Geelong, Mornington, Sydney, Central Coast, Newcastle, Wollongong, Brisbane, Gold Coast, Sunshine Coast. And if you stay on that track and then you apply some of the stuff we'll talk about in future episodes from like Simon Presley, some of the guys at like, who else is it that's got some really cool stuff down in Sydney there? DSR, sorry.
Oh, yeah.
Jeremy Shepherd. We'll talk about some of their findings and how it relates to picking markets, but gold. And so that's where I'm focused on personally. And I know that Perth looks cool at the moment. It's absolutely kicking ass. Adelaide looks cool as well. Like, both of them have a good history of performance. But when Simon and I looked at the, 46 years between 76 and 2016, roughly, we found...
It was exactly that.
Yeah, that was it. In the Homely report, Brisbane was number one at 9.7% when you look at the total return divided by years.
Over that period of time.
Over that period. Sydney was 2 at 9.6. Melbourne was 3 at 9.5. So very, very close.
Yeah.
And then Perth was 8.2, which is still an incredible return. It's just...
a lot lower than the other three.
1.5% on $1 million compounded over 30 years can be hundreds of thousands of dollars of gains that you miss out on.
And I want this to be simple. Like, I know there's over 13,000 suburbs throughout Australia. Like, there's probably around 1,000 in Brisbane, Sydney, Melbourne, and some of those regional markets that you need to look into, maybe a bit more. And that simplifies things. I don't have to look nationwide. I only have to look at those. And the other cool thing about that as well is they run on different cycles. So, the inner city Sydney, inner city Melbourne generally work at the same time, then it'll ripple out from there. And then it'll generally ripple into Newcastle, Central Coast, Wollongong, Geelong, Mornington Peninsula, Gold Coast first, then sort of Sunshine Coast, then Brisbane's last. So you can watch the flow of money and you can watch this ripple effect occur throughout a growth cycle. And that makes it easier for, really sophisticated investors like you and I that want to time markets to the best of our ability and get that short-term growth and recycle that debt.
I love that. In terms of the piece of positive news for the week,
it's locked in.
Yeah, so
some tax cuts coming, baby, for lower income earners.
Yeah, for lower income earners.
Let's say that, because the highest tax brackets, they're not changing at all.
No, they're just pushing the number out a tiny bit.
But the most meaningful one was really the lowest income, so up to $45,000. I think it was from $18,500 to $45,000. It's going from 19% to 16%.
That's a good saving for those people out there on that sort of money.
And that might be somebody that's got their first job, straight out of school, straight out of university, might be earning just a little bit less. And it's you want to be maximising your income and minimising your expenses at that time just so that you can save and get ahead as well. So it's great that it helps them. The next tax bracket was that $45,000 to now $135,000.
Yeah, they've jumped that up pretty big.
That was $120,000, so they've jumped that up by $15,000, which is great for people that were earning just over $120K per year.
A lot of people in Oz now sit in that bracket, and it's going to help a lot of those people that are over the 120 and not to get hammered on that bit of money that they're earning above that.
The biggest percentage of the population earn that amount of money. So that was previously 32.5%, going down to 30%. So a 2.5% saving. And that equates to hundreds, if not thousands of dollars. And that allows you to hold more negatively geared properties. It allows you to increase your income, save a bit more money. It'll increase your serviceability because you've got more income according to the bank. So there's so many positives that come out of that. And one thing that we're going to do in future episodes is we're going to get our accountant on the podcast and talk about how these are actually going to impact the population, and also a mortgage broker as to how it's going to actually affect your serviceability, which will be super fun episodes to dive into. But really positive news, those tax rates haven't changed in a very long time, so it's good to see something.
Without a doubt. And like Phil says in his book, The Secret Life of Real Estate and Banking, all gains in society, whether that's major stock market gains, major gold gains, major Bitcoin gains, tax rate concessions, land tax concessions, first home buyers grants, builders grants, whatever you want to, whichever way you want to slice the dice, all of those gains end up back in the land prices. So as we've seen in Australia, as we've gone through these 2 years of inflation, incomes have gone up for many people, as has the cost of living, but so have rents, and they've taken an equal portion. So let's say the average income a few years ago was 100K per year. Just theoretically it wasn't, but I'm just going to use a round number. And at that particular time, people could afford to pay $30,000 a year in rent. With the average income going to 150, theoretically it's not, it's below that. But now we're seeing $50,000 of the rent, of the income going to rent. And so it's always going to grab it in the rental returns and the house prices. And if you look at property over a long enough period of time, like we have in previous YouTube videos, against inflation, against the interest rates, over time, you'll see that really only property and commodities, particularly gold, properly hedge against inflation, which is why global house prices have gone off their head since COVID, and why gold is at all-time high or just below it right now.
Love it, man. Let's wrap it up.
Let's wrap it up.
Thanks, bro.
Woo! That's a wrap.
That's a wrap.
Getting
Have a
cool,
spin.
bro. Yeah.
Oh, sweaty. So sweaty. Oh, that's good. Look at that. So nice.